Okay traders, so in this video we're going to answer a lot of questions. How do I form a higher time frame bias and how do I take winning trades using only three concepts? So when you form a higher time frame bias, we're going to be breaking down a trade from Thursday. So let's just start by understanding what Thursday was doing. So on Thursday over here, what we can see is if I just kind of replay price just before the AM session starts, what we're looking at typically, so we've had Tuesday. So this was Tuesday printing the high of the week at the time, right? So if we just kind of draw this over here, we had Tuesday printing the high of the week. And also you want to understand liquidity and you want to understand fair value gaps. So we had a fair value gap here from Tuesday. I'm just going to mark that in the gray. So that is a fair value gap and that is a point of liquidity because it is the high of the week. Now, if that's the high of the week, where is the low of the week? So the low of the week is down here on Wednesday. We had this very, very large wick, which actually, if you think about it, swept the lows from Monday. So we took out Monday's low just over here. So you want to ask yourself, if Tuesday and Wednesday have done what we call manipulations to the upside and the downside, right? This for me is a manipulation, right? Wednesday/Tuesday will create the low of the week in this case. Now, this is a Wednesday, and the way that I identify that is by seeing Monday or the previous week's low being swept. I think we may have seen, was it the previous week? Well, we had the previous week low being swept over here on Wednesday. So usually this happens on either a Tuesday or Wednesday. Recently it's been happening on a Wednesday. So when I see this, right, I'm using very, very basic kind of market structure and fair value gaps, right? ICT 101. So we see price breaking structure over here. So we see a market structure shift, we see a liquidity sweep, and we also have a bullish fair value gap resting over here. So we have a bullish fair value gap. So we have signs of a reversal to the upside after Tuesday gave us a very aggressive melt off. So what's going on here? If we just go to Thursday. On Thursday, my bias was bullish. And the reason my bias was bullish is there's quite a few reasons. So when people struggle with a higher time frame bias, this is why they struggle with it. So a higher time frame bias is easy to fix. It's easy to form, sorry. You're looking for a liquidity sweep, right? You're looking for a liquidity sweep. Previous day low, previous week low. You're also using what we call the weekly low. So where has that weekly low occurred, right? Typically on a Tuesday or a Wednesday, right? And this is something you need to train your eyes to see. But we had the low of the week just over here in this region. So when you see the low of the week occurring, you want to be trading away from that. So i.e. bullish in this scenario. Right, we also have that liquidity sweep accompanied by a market structure shift you can see with the arrow, and you also have price giving a fair value gap. So we have significant amounts of, we have significant kind of evidence for a bullish higher time frame narrative. So when we go into Thursday's actual trade, what I like to do is I like to mark out what we call local fair value gaps, right? It's really that simple. Trading is really simple. You are trading from key level to key level, right? That's all you're doing. So if we kind of study how this fair value gap panned out, right? So this fair value gap was created at 8:30 a.m. Eastern. So we want to kind of understand what was going on. So we had here market open. Let's just go down now to, let's just stay on the 15-minute time frame and understand, right? So we saw this 15-minute fair value gap being respected, right? So this was market open, 9:30 a.m. Eastern, 2:30 p.m. UK time. So what we're seeing is we're seeing the pre-market fair value gap being respected. What's even more interesting is that the market open presented us with another 15-minute fair value gap, right? It's that simple. So why was I looking for a trade at this area, right? So the reason why is because when I trade, I use what I call the XXX model. And so the XXX model is very simple. I want traders to kind of understand this. So a XXX model will have three things. You need to know where to trade from. This is a fair value gap, a 15-minute fair value gap, a 15-minute POI or point of interest. You need to know what to look for, and this is essentially a PO3 entry, and we're going to dive into what that means. And then you want to know why you want to be buying in this case. So the reason you want to be buying is because we can see aggressive sellers failing, which means that buyers are in control. And this is the most important thing. So this entire trade is based off a higher time frame narrative using the weekly power of three. Essentially, we're using the weekly low and the weekly high, and we also have a place to target, right? Notice how we're targeting the fair value gap from Tuesday. So when we have that in place, right, we're just going to now go down to the 1 minute time frame and see how you could have taken this. So the way that I trade, right, is that I only focus on fair value gap. So if we just kind of take a look at this over here, we make it really simple, because this is how simple trading is, right? Trading is super simple, right? What I'm looking for, and I'm going to show this in the Discord as well. What I want to see is I want to see price come down and then retest, and then we head higher. And that's the only thing you do as a trader. That's the only thing. You enter somewhere here and you exit somewhere here. Now, how do I ensure that I can get the correct entry? So the first thing we're going to focus on is you want to be trading at a key level. This is very important. This is a 15-minute fair value gap, and we have the 1-minute fair value gap resting over here just after market open. That is the what. So the what comes down to a fair value gap. Now we're going to be focusing on, the where comes down to a fair value gap. Now we're going to be focusing on the what. So we want to be using a PO3 entry. So this is 4 hour. This is the 4-hour PO3. Again, if I quickly show you what indicator that is the PO3 by 2 degrees, right? So if we just kind of type in PO3 and you go all the way down, you want to look for this one. So PO3, HTF PO3 by 2 degrees. And so that is the name of the indicator. And so this is just a handy tool, right? So what you're looking for, again, is you want to see price doing this, right? So when price comes into a fair value gap, you want to be essentially buying at a fair value gap when price goes below the 10 a.m. Eastern. This is the 10 a.m. Eastern price. Price is nipped below and you're looking for a retest. And so what's going on here, right? You're below what we call, so this is what we call, you're below the 10 a.m. Eastern, right? And you're looking for buyers to be in control. You're looking for buyers to be in control, right? This is essentially the 2022 model. It's just the proper way of trading it. So here on the Discord, we can see what was going on that day, right? So essentially what I'm looking for always is I am looking for price to come inside of a key level. That is the most important thing I'm looking for. And so if we just kind of, if this loads, we're just going to be understanding what was going on. So here we have the same chart. This is the ATAS platform. And what I want traders to understand is that if you have psychological problems, if you have problems with your psychology, the best way is to simply install patience. And so if you are trading, you need to understand your job is to simply wait for a key level and then wait for confirmation of the key level. And so you can do that with the PO3 and a basic understanding of order flow. So this is where the order flow does become interesting. So we're going to be breaking down what happens over here. So why is this a good place to trade from? So notice how we're below the 10 a.m. Eastern. So that's that red line over there. Notice how we've tapped into a 15-minute fair value gap and this refined 1-minute fair value gap. And we've had a pretty aggressive rejection. That is important to understand. But how do you know it's a rejection? Well, the only way you can really see it's a rejection is by understanding the order flow footprint charts. And so the order flow footprint charts, sorry for the delay, the order flow footprint charts will essentially give you a kind of a scenario of what's going on. So you want to be understanding the order flow a little bit more detail, let's say. So if you just take a look at this entry, so I took an entry on that day, so I went in with 11 contracts. So that my entry was at 63.15, stop loss just at about 63.10. So that gives me about 5-point stop for about a 10-point reward. So this was just about 2-to-1 risk reward where I took my first target. So if we kind of go down and understand what was going on essentially in these candles, what was going on? So if you just take a look here, I entered another few contracts, so up to 14 contracts. What was going on at this fair value gap, or just above the fair value gap? What does 99 for 5 mean? So I want you to think of the market as an auction, right? And you want to almost look at it from a very logical, hyper common sense perspective. If you see red delta, right? So what we have over here is we have delta. So we have the buyers and the sellers inside of the candle. When you see red, when you see a lot of red, what this signifies is that there's more market participants looking to actively sell. There are sell orders going in, hitting the bid. These are aggressive sellers. So when these aggressive sellers fail to break below the zone, right? Because we saw a lot of aggressive sellers. Over here, we saw aggressive sellers. Over here, we saw aggressive sellers. And we saw the market aggressively moving higher. 1, 2, and then 3. So my entry was just at this break over here. So that 63.14 was my second entry. A resize entry, if you like. So what essentially was going on was the reason why this was a kind of an A+ setup for me. And of course, it did rally all the way to the target. So you want to understand a couple of things, right? Trading the power of three and trading ICT alone isn't enough. It's not enough to key off a fair value gap. It's not enough to rely on the power of three, and it's not enough to rely on a silver bullet or a market structure shift. What you need to rely on, or what you need to understand, is what is going on inside of the candles, right? You need to have a strong understanding of order flow. So we're going to be covering that one more time. So we're going to be understanding essentially what the order flow was. So if we just kind of see the initial reaction in, right? We're seeing a heavy amount of aggressive selling, and we can see that here, we can see that here, we can see that here. So if you just understand what was going on, these aggressive sellers were being rejected off the zone, right? So look at all these aggressive sellers, right? You see, you don't even need to read the numbers. You need to read red, red, red. So you see a lot of red, which means that the aggressive sellers aren't being rewarded at this area, because if they were being rewarded, price would have moved higher. Price was aggressively selling. There were market participants hitting the bid, but the actual price itself was struggling to sell off. That is your indication that buyers are stepping in, right? Passive buyers are stepping in. And if there's one thing you want to take away from this video, is when you come into a fair value gap, the only way you can validate any ICT concept, whether it's a market structure shift, a fair value gap, an inverse fair value gap, a breaker, a 22 model, whatever your models are, you need to validate it with the buyers and sellers, right? Who is in control between the buyers and the sellers? You always want to ask yourself that question. So you want to switch from patterns and fair value gaps to actually understanding who's in control. And so the way we identify who's in control is once again by seeing who is aggressive and where the market's headed. So to make it simple, to really simply break it down for traders, right? The way you can validate a fair value gap is to see who is aggressive and who hasn't been rewarded. So in this case, we see a lot of sellers, but the market breaks higher. This gives us an indication to put on contracts, 10, 5, 10, 15, 20 contracts. This is what gives us the indication to do that. And once you've done that, once you can understand who's in control between buyers and sellers, the rest of it becomes very easy, because you're simply trading from one fair value gap to the next. So how would I have taken this trade if I was taking it, right? So if I was, physically taking this. So I personally would not want to enter when we're at the 10 a.m. Eastern, right? So this is where you want to be entering. So if I just kind of play price on a little bit, what you want to do is you want to understand a simple break and retest, right? This is a simple break and retest model. So if we kind of play price on a little bit, what you saw over here is you're seeing price breaking and retesting and then heading high. So the art of a retest is essentially understanding what's going on at the reaction and what's going on at the retest. And the only way you can kind of signify this is to understand who is in control between buyers and sellers. And so what we saw is essentially sellers were trapped. So you can confidently place your stop loss over here. And your first initial target would be the highs of the day, right? That's just for a 1 to 2 risk to reward. But we know from our higher time frame analysis that we had the key level from Tuesday, right? We had that fair value gap all the way from Tuesday, something we went on over at the start. So when you're trading, right, you just want to be trading from one fair value gap to the next, right? So your ability to read fair value gaps is directly correlated to how well you can trade. Your ability to read fair value gaps is directly correlated to how well you can trade, right? That is the truth when it comes to trading, right? You need to understand who is in control between the buyers and the sellers. And so what I'm going to do is I'm going to finish off this video by getting these two charts next to each other. Just going to wait for the Discord to load again. And if you have any questions on the order flow, on the footprint charts, right? So let's just get these up with each other, right? So what was going on, right? You got to understand the interaction between buyers and sellers, right? That is the most important thing. So this is the ATAS platform, and this is what I use to trade, right? So ICT alone is not going to make you profitable, right? ICT alone isn't going to help you. What you need to understand is you need to understand that these kind of buying trades come when you understand who is in control between the buyers and the sellers. So when you have both of these next to each other, what are the main concepts you want to understand? Well, you want to understand fair value gaps, right? 15-minute fair value gaps, 5-minute fair value gaps, 1-minute fair value gaps. Then you want to be entering when you see aggressive sellers failing, because when you see aggressive sellers hitting the bid and they're not being rewarded, that means passive buyers are propping up, passive buyers are in control. And that is the only reason we saw the market heading higher here, all the way up to the next fair value gap, just over here, right? Same charts, same everything, right? So just look at this chart and ask yourself, will the left-hand side actually tell me what I need to know? Right, so what is the entry model on the left hand side, right? It's a trick question because there's no entry model on the left hand side. The left hand side isn't giving you any entry model, right? The only thing that's giving you an entry model is the fact that you're seeing aggressive sellers hitting the bid. Aggressive, that's the left number, right? So you can see down here, aggressive sellers are hitting the bid, and those aggressive sellers did not succeed. Because if those aggressive sellers succeeded, they would have broken below this low and certainly below this fair value gap, right? But they didn't do that. We saw aggressive sellers here, and then we saw those aggressive sellers here at the entry, just over here at the entry. So when you see aggressive sellers and the market moves higher, that means that buyers are in control and you should be buying. Right, that is the only thing I wanted to go through in this video, as well as a higher time frame bias. So you start with liquidity and fair value gaps, and you go down to fair value gaps in order flow. That is how I trade.